people are saying we needed to invest into oil like a second before the war started, because now it's the time to make huge money on oil.
When you start to read the news, basically they create the fear.
But I understand that still this panic attack is influencing the stocks, right? And people are still selling.
When they start to push the crisis, the fear, in the news. So that's the manipulation. And they usually do the opposite what the mass do.
This is Where We Left Off, the podcast for founders, operators, and leaders building in a technology-driven world. Clear thinking, real consequences, no theater.
Hello, I'm happy to welcome you at our new episode Where We Left Off, and today we have a great opportunity to learn about investment. How do we invest? Where the money goes? What's the right time to invest? I honestly had no clue till I met this wonderful lady, and I am happy to welcome Inessa Huller. I would like to introduce her a little bit to our audience today. And Inessa has a lot of achievements, so I need to read it. Inessa Huller is a Swiss-based investment coach and financial educator with a background in banking. She teaches German-speaking investors primarily in Switzerland and Germany how to build active income from the stock market through dividend investing, swing trading, and active portfolio management. She also the author of Neben Einkommen Börse, Stock Market Side Income, and runs the Active Investments Challenge, a 4-week program that helps people move beyond passive investing toward building real cash flow from their portfolio. It sounds like a lot. Inessa is an active investor herself, and she doesn't just teach theory. She trades and invests with her own money and shares her journey openly with her community. And actually, this is how we met. I learned about the journey of Inessa on the stock market, and I honestly wanted to learn everything and as fast as possible. Because, in the supply chain industry that I am in, we have been talking a lot about political and geopolitical situations, how it is impacting the trade and how the market is in balance right now. For example, when we started with the Red Sea crisis, the ships with the goods needed to reroute themselves, and we caused a lot of delays to the clients. For the track and trace digitalization of the transportation and supply chain, this is a great use case, of course, but the whole market suffered from uncertainty, from the delays, and so on and so forth. Now, in the recent events, and we are still recording in the moment when the war between Israel, United States, and Iran is happening, people are saying we needed to invest into oil like a second before the war started, because now it's the time to make huge money on oil. I invited Inessa to explain to us how to invest, how to understand the crises in a positive way, how to interpret them for the stock market, and how to make money out of this. So Inessa, the floor is yours. Tell us a little bit about yourself and how you see all this crazy world happening around us.
Thank you, Mariana, for inviting me. It's very kind of you. I'm really happy to be here. And yes, about myself, you already said a lot of things. I'm based in Zurich in Switzerland. I've been living in Switzerland since 15 years. And I came here basically after my university for work. And after 2 years, I switched to the finance sector. And that's where my journey started. I started to work in a bank, and basically I immediately started to invest my own money. That was one of the conditions in the bank. We had to open an account, and also after a while, I started to invest myself. I started also to trade. I used different financial instruments, from stocks until commodities and so on. And when I quit, I started my own business, started coaching. Basically, in the beginning, I started to coach women about investments, and also I wrote a book. It's about the second source on the stock market. And so here we go. You're basically one of them.
So what do you do first when you want to learn investment?
Mm-hmm. It depends if you really want to learn about investments or you want to trade. It's based on your goal.
What's the difference?
The difference, if you want to invest, and your goal is basically to invest somewhere and keep the, let's say, the stock or the company where you invest in, or even commodities. You talked about gold when we were talking about it. And so basically you keep and trade it for a long time. So, for example, if you want to invest in Apple and you think, okay, it's a nice company, you read about it, you find out everything you need, and then you think, okay, it's nice to buy and sell and take the profits out and then invest again. And if you trade, you're not really interested to keep the stock or the company in your portfolio for a long time. You actually are interested only in profit, just the short-term profits. For example, you buy 5 pieces of Apple and then you sell 5 pieces. You don't really keep the stock for a while. Okay, so that's the difference. And in the investments, we have to look about the company, about the forecast, about how they do their profits, how they are, like what is the salaries, what is their, just anything about the company. Anything you can find, anything can impact the company. It can be politics, it can be anything else. And if we are talking about the trading, it's more you need to look what impacts the price, not the company itself. So that part is not that interesting anymore. So we are really focused what can impact the price. And then we talk about the technical analysis or chart analysis.
So what I'm learning from what you are saying is that, first of all, without a deep research on the company, you can't invest into stock market. You can't just blindly go and choose whatever you like. If I like Apple because I like the phones, maybe it's a good start, but I need to research it, right?
Well, you can. And that's actually about 80% of people who are doing like this. And we did this before, you did this before, and you know what results we got after, right? And the thing is, if you, let's talk about an example. A friend of you comes to you and say, I want to build up a startup. It doesn't really matter where the startup is. It can be in US, it can be here, Europe, doesn't matter. And they ask you, the friend or whoever it is, they ask you, would you like to invest in my company? What would you do?
So first of all, it's very hard to say no to a friend, but it's probably a stupid
let's say
business
it's maybe
answer.
not a friend, it can be anyone.
I will try to do a due diligence, at least on this offer. Yes.
What would you like to know? What is important for you to understand?
I want to know the business plan. I want to know the fit of the product for the market. About this, you can read in my book, you know. All these kind of details, where the company is aiming to, do they approach other investors, what's the pitch, what's the status right now in the bank, because even if you start a company, you definitely need to put something into the bank. You need to have the plan for the product. You need to check the fit for market. I already repeating myself. I think these are the elements that are critical for me to know. And depending how long the company exists, right? I want to see what happened to the company, what were the decisions that were done during the course of events.
Yeah, basically what you just did is fundamental analysis. And there are 3 things that every investor should find out. It's first the idea. Does it match with your principles, with your ideas? And do you think this idea will have a big demand after, you know? And the second is time. No one wants just to give someone money for just like that. We always want a profit or return after some time. And the shorter the time, the better. And the third is, what do you think? What is the third thing that you really want to get out of it? The most important for every investor.
All right. Money, of course, yes. Yes. Sorry, I want to ask you a question. I mean, I agree with all the points, but the idea. I mean, why a company needs to fit my values? If I don't believe in sustainability, but I understand pragmatically that a company that is doing green economy, circular economy will work for future, because right now it's a trend. Shouldn't I invest into this nevertheless?
It's not only about the principles or the vision. It's more about how this idea will get demand in general. So is this idea good enough? Did anyone already try this idea before? Do you have competitors?
I see.
So it's more about to get the information about the idea, not only about, okay, do I want to invest in tobacco industry, or do I want to invest in alcohol? It's not only about that. It's more about what is surrounding about this topic, about this idea. Do we have enough demand? Will people like this product or these services, or is it just something no one needs? And then you invest in that company, and then you will not get anything out of it.
Can I ask you, personal detail about my portfolio I want to share with you? You definitely know this example, but I want to understand it more in detail. I have invested into Hapag-Lloyd in the year when we have been involved in its digitalization. So the idea or the concept of the company, of the technology, and why this company exists, I completely liked. I made my due diligence. Hapag-Lloyd exists over 100 years, right? We have this company. We'll continue having this company. I saw the price, and I thought that maybe it will even grow further, and I invested. The situation is that since that day, I think when I invested was the highest price of this stock ever in the history of Hapag-Lloyd. I never got the same value for the stock till now. What did I do wrong?
It's a great question. The thing is that when we do fundamental analysis, we have three things, or basically three parts that we need to analyze. The first part you did already, it's the figures. You need to understand how the company is doing, how it works. Do they have debt? Do they have profit, net profit, etc.? So you already did this, tick, right? So it's really good. The second thing that we need to understand about the company, sometimes the figures might be good or sometimes they are bad, and you still invest in the company. Sometimes they are bad, you need to get out, you need to sell, you don't just invest there. And sometimes the figures are not so good, but you still invest. So the second part we need to do, the analysis, is the SWOT analysis. So basically you need to know the risk, the chances, the threats, whatever. So you just need to understand if this company is interesting, is it value for money, etc. So should we invest in there or not? So that's the second part. For example, if the numbers, let's say the numbers are this year, the profitability is less good than the last year, for example, yeah, like the revenues went down, maybe the whatever, just it went down, let's say. And when you start to deep dive, you see, all right, so they started to invest in another company. They want to expand. They want to get more clients, and they maybe invest in another company with the clients.
With new client base.
Yeah, with the client base. Mm-hmm. Yeah, exactly. So so this analysis is super important. If we don't do this analysis, you don't understand only because of the figures are good or bad, if you should invest in this company and if it has potential in the future or not. That's the second part. Mm-hmm. And the third part, let's imagine everything is good. The SWOT analysis shows it has a lot of potential. You should invest in this company. And then the last part is really, really important, is the fair value. It's the true price of the company. And if the fair value, the value of this company is too high, it's overpriced, and you start to buy it, and then it drops, and it might never get up at the same level when you bought it. So that's a problem. And most people, they start with the first part, they start to analyze the figures, and they don't do the rest, these two other parts. That's the issue.
I see.
Or you do the first and the second, you learn about the company, but you don't look at the fair value price. And you invest when it's overpriced. You don't wait.
Let's look at the question of my friend who wanted to invest into oil and I think missed his second chance already. I didn't do this move. I didn't invest into oil. I honestly had no time to think about it. But if I think about it today, the first war between Israel and Iran happened in June 2025. And even if it was even not the first one, but it was the long war of 12 days, right? What already triggered the oil prices back then. If oil would be in my portfolio, I would learn from this fluctuation on the market. And in the moment there were threats between Trump and Iran, I would probably already look very carefully and put alerts on the oil market and invest. This I say while I didn't do even one move, right? How would you do it? Or what did you do when the war started? What was your first reaction? What did you open? Which companies did you check when it happened?
Okay, first of all, we need to actually split what we invest in. So if you invest in stocks, you do the analysis a little bit different. Mm-hmm. And if you do invest in commodities or in other asset classes, we do invest a little bit different. So, for example, commodities like gold, oil, whatever, they don't pay dividends. It's not a company. We basically invest in the price fluctuations. Like whatever we see, what impacts the price, we start to think, okay, does it make sense to invest it now, or should we invest later? Like, for example, war started, and then, okay, it makes sense to invest now. So it's more like riding a wave. But if you invest in stocks, it's just a little bit different because it's a huge company behind the whole things, you know. So we cannot just invest in the same way in both or like in different asset classes. We need to distinguish them.
Did you invest into oil when the war started?
Me personally didn't. I do invest in gold, but I wouldn't say I invest in gold. I trade gold.
I see.
More like this.
I see. You know, for the supply chain, there have been so many changes, and also we count endless days after the Red Sea crisis started with Houthis and so on. It causes a lot of changes for the market and also for the way logistics is operating. Nevertheless, I see that the companies find a way to bring profit back home. And I understand for those of us who are investing into companies from our industry, it's an interesting market to observe and make the move. But I want to take all of us a little bit out of this into the world of very interesting and mysterious digital coin and everything what's related to this. Because I know there are those magicians that said that invested into Bitcoin even before it was created. And I know those who are still not even close to this decision and all the time say that they still have time to observe how it's developing. Maybe one day they will go into this. I understand that amount of chances here are limited. And I understand that the behavior of this market is different than stock market, for example. But this is all what I can say. What would you say about this topic?
It is different. You're talking about the cryptocurrency, right?
Absolutely.
It is different, but nevertheless, basically the big investors, the big fishes, they are still invest in all of them. You know, it's not only that we have big companies that invest just in the stock market or just in the commodities. They also invest in the cryptocurrency. Basically, they're the same. Mm-hmm. You know, the hedge funds, the big corporations, they invest basically in all of them. And now more and more also in the cryptocurrency. And the cryptocurrency is just more volatile. it just geopolitics, they are more impact the cryptocurrency. Like it's just faster. It goes faster up, it goes faster down, and there is much more manipulation there because their liquidity is much lower rather than in stock market. And the stock market, we also have manipulation. We also have these same things. It's more smooth. It's more calm. It's not like this, when, for example, when the Trump decides to postpone the activities and then basically it's supposed to go up, and the cryptocurrency, we immediately see it goes up, and then in the stock market, we don't see it immediately. It goes, but it's like a bigger ship that has to move rather than smaller ships.
Oh, it's so interesting. Can you speak more about manipulations?
Mm-hmm. Yeah, manipulation is when they try to bring a lot of news and trigger the emotions. For example, the mass supposed to have fear, or the mass supposed to feel euphoria. And that's the problem. So when you start to read the news and everything says, we are going down, there is a war, and the Europe will have also the same issues, and the flights will be shut down, and everything will be so it basically they create the fear, and with this fear they start to slowly invest. When the normal investors, just like average people like you and me, they get out because they are feared of this crisis, and they start to invest with the lowest price. Or the other way around, when they say everything is amazing, so the economy is booming and whatever, the news, so I don't have to tell you this. And then they are slowly getting out, That's the issue. Or they just push the news, so it's a lot of fear, and then the people buy and buy and buy until, the highest point, and then they just short all this market when they start to push the crisis, the fear, in the news. So that's the manipulation, and they usually do the opposite what the mass do.
Probably it's important to say who is really investing in the market. I mean, the regular people are investing, of course, as much as they can and what they know. I understand that a lot of funds are investing, right? So our pension is invested. Who is panicking then? Because when I'm listening to you, I understand that if you a little bit understand how the market works, you need to feel more confident, be less influenced by different changes, right? And kind of stay still. And better not to move at all than to make emotional moves in the market. But I understand that still this panic attack is influencing the stocks, right? And people are still selling. Does it mean that also the professionals that are managing our funds, the professionals that are investing our pension into stock market, they are also panicking?
They also panicking, but not that much as the mass, like the more individual investors. But it all depends what you invest in. If you invest in stocks, and if you, let's say, just normal people like you and me, just private investors, when we invest in some particular companies and you don't know about these companies, you have no clue what the company is doing, how they do their money, where does the money come from, how do they sell their products or services. They have no idea, they don't know if this is a good company and it can survive the crisis. Mm-hmm. And that's the issue. And when we start to analyze this, and you know what's behind the company, you know how strong the company is, it's a quality company, then you start to invest, and no matter what crisis we go through, it will stand out. It will still keep their business, it will keep their profit, and they will survive any crisis. And that's the issue when any investor, if you ask, did you analyze your investments, what you have in your portfolio, they usually say, yes, I looked at the figures, yeah, I know something about this company, but they don't do this analysis, this work that no one wants to do.
My acquaintances are even not saying this. They say I invest into S&P and that's all. And there's the best companies in the world. They will manage it somehow. And over the years, it will be fine. So I'm even not going into any fundamental analysis of any of the companies there. What do they do? Why they do like this? Is it really more beneficial to invest into a package like this? I know that it has a special name, right?
S&P 500, it's an index of 500 most important US companies. And obviously you have some really good ones, let's say top 10 companies that are really good, and the rest might be not that good. So, but basically what you're saying is I'm investing in US economy. So whether the market is good, you will profit. If it's not that good, then some years you will maybe not profit or not at all, or even you will have a minus. But it's not really about making the money. It's more about, okay, I try to cover my inflation. I try to just get a little bit out of my money, so just it doesn't just lie in my accounts, etc. So it's more about this. It's not really about making money. It's not about increase your capital. It's not about that.
I see. And if we come back to your question, if I want to invest into a company, into a startup, and if we talk to investors that are doing pre-seed and seed, what do they have today as a tool to look into portfolios of the companies? How do they do in this situation in the world, in this geopolitics, their fundamental analysis? Because one thing is to do the due diligence on this particular company, how they found it, what's their plan, and another one is how it will play out in the market like this.
Yeah, it depends how you invest in those companies, because those companies are not listed on the stock exchange yet. Right. And it's a little bit different. It's higher risk to invest there. And it's not like you can just go to the company and say, okay, I invest in you, right? It depends like what amount you bring to the company, etc. There are some, let's say, not only tools, but some brokers that offer this opportunity. If you want to invest, for example, in private equity, or if you want to invest in IPOs, it's basically the company. It goes on the stock exchange just before you start investing, just before it goes on the stock exchange. Those are the IPOs. And if you want to invest in an IPO before it goes on the stock exchange, before it is listed, it's a little bit more complicated. You might not get the allocation. You might not get your shares for your money because you're maybe too low. The amount that you invest, it's too low. There are a lot of things that you have to go through. And it's not that easy. If you have a bigger amount of money, you might get an allocation. It depends in which broker you start doing this. It all depends on that. Yeah.
I don't want to catch you unprepared, but I want to ask you a question that would be beneficial to all of us to learn more. Can you give an example of a bold move when, for example, one of your clients thought that he's doing it absolutely correct and right, and actually regretted it? What are the top 3 biggest mistakes of those who call themselves experienced investors on this market? I would be interested both in trading and the stock market investment.
Are you talking about before me or when they started to invest with me?
Whatever you like to cover.
Because when they start to invest with me, it's usually a bit different. They start to do the analysis, they start to do proper things just to achieve their goals. And when they do before, usually the most cringiest things that I think that they do is just to believe that it's easy to put your money anywhere and then get a profit of it. And they start to bring this money to some scammers, to like use platforms that are not really real or like fishy or whatever. Like this is the most, I would say the biggest issue actually in these things. And in the past there were people that they start to invest, for example, in any company. They didn't do analysis. They didn't know how to invest or what to do. They just invest in random stocks or what they found out anywhere from someone, from their friends, for example, and then the company just flopped, for example. Yeah.
We said you don't speak about me.
No, I'm not. No, I'm not talking about you. It's just like I cannot even say about one client because I think it happens to everyone, even to me. For example, back then I invested in Wirecard. You know this story, right? I invested in Wirecard. Thanks God, it was like very small position in my portfolio, and then it was basically kind of a scam. It's a bit different type of scam, but it is a scam, you know. And then I basically 98% I lost of my money in that position.
In this position.
Yeah.
What will be your advice to people that live from salary to salary? Because they might say, okay, investment is for those who have extras, and for the rich people, they have these extras to invest into something. We don't have time to study how to invest, but even though we would have some time, we don't have a capital to begin with. Well, what will be your advice here?
The first advice I would give, just start to save money, just a little bit of your salary. It can be 5 or 10%. It's better than nothing. And then just slowly you can start investing. You can basically, everything what is listed on the stock exchange, you can buy for $10, for $20 per piece. You know, or start even to read my book, and then after slowly you can build up. So, I mean, I started myself with 2,000 francs, really.
So what's the key point here? I understand you need to do it regularly then, right?
Compound. Yeah, it depends. It's the compound interest rate is really important here, but you don't need to invest like regularly, basically in the same day of a month, for example, because the market is fluctuating. It's normal, and sometimes you invest in the middle of the month, sometimes you invest 2 times a month, sometimes you invest 3 times a month. So it doesn't really mean that we need to do it on specific day. Right. You can do it, but it's not really profitable because, you know, you might buy just really high and you sell low, so it's not really making sense. So it's better to be consistently, but you need to analyze, to see what the market is doing. So to be on time, to invest or reinvest on specific times in the month, let's say.
It sounds like the huge way of going forward, but it seems to me to be like a full university studies here. And what if people don't have time? What do you advise to them? I know you build the whole academy concept, and can you share with us how to do it relatively fast and without going to study economics and all these things?
Yeah, basically it's not a rocket science. It's not really, you don't need to study 4 or 5 years in the university, because what you usually study in the university is more the theory. Right. And here we need the practical things. So you need to understand what you will be investing in. So whether it's stocks or it is commodities, are you interested in gold, oil, whatever, these things, for example, or you are interested in funds or ETF, like this kind of things. And then the second, you need an account to do these things. So it's practical, you know, you need to find the specific broker. And then you need to learn the analysis. Nowadays, we have the AI, we have a lot of tools that we can use and do this in this short period of time. So you don't need studies for years for that. You can do it in smaller steps. And my academy is usually 12 weeks. We also have intensive courses like challenges for 4 weeks. It's just shorter things, but it's more intense. You need to be a little bit more focused rather than in the bigger program. And those are the steps. You need to know you will be investing, where you will be investing, and how you're going to do this.
And are you always there? Are you helping them with answering their questions?
Yeah, we have live calls. We do these all practical things just live once a week. And we even have the offline events. We used to have one last year in November. It was nice to meet also people offline and just to exchange and because most of the people are having the same goals.
Right.
You know, you understand that the system wait until you retire is probably not enough. You need to do something before. Absolutely. And it's nice to interact with others.
It's such an important point. I think that it's very valuable discussion that we had, and I'm thinking about it that maybe we could go on and on and on, and every topic that we discussed, from cryptocurrency till trading and geopolitics and the impact on the stock market, it's an hour by itself. But I think it's better to follow you in Instagram, right? If I'm looking up, so basically. Inessa has the website for the book, and she has her own Instagram account, of course, also YouTube account where you can follow her. For the website, it's www.inessa, INESSA, Huller, HULLER.ch, written in one word. And Inessa Huller can be also followed on Instagram. I think even by following her, you would learn way more than just by doing nothing. And taking the book into account, I believe it's a pleasant read if you speak German. But if you don't and still want to have an advice, I believe Inessa will be open to help you with this. So you can also contact me, and we will establish the contact with Inessa if you're interested to learn more about the investment and your future money, income, passive income. Thank you so much for your time. I think it was very insightful. And thank you for the opportunity to speak about such an intriguing topic, money, that every one of us is worried about.
Thank you so much for inviting. It was a pleasure talking to you. Thank you for your questions. Were quite insightful. And I hope it's also valuable for someone, let's say. And great. Thank you.
Thank you.
This is where we leave it until we pick up where we left off. If this episode challenged your thinking, share it with someone building something that matters. Follow the show and subscribe to stay ahead of what is coming next. Where We Left Off is produced by Precepts, executive advisory for organizations where growth has created friction, misalignment, or stalled decision-making. All rights reserved.